Hello traders and welcome to the market opening preview on a Tuesday, July 28th, 2015. Traders, great to be with you, coming to you live from Pattaya, Thailand. Bright blue sunny skies, nice cool breeze today, white sandy beaches, people out there just walking around having a great time. It's early in the morning in Thailand. It's about 8:30 in the morning, Thailand time. So we're getting started early in the Asia session as we normally record this video during that time. Traders, this is brought to you through FXCL Excellence in Trading. Please come visit our site at fxclearing.com for your trading solutions. Quite a nice website, some good information, good training, lots of opportunities. Take a look at that when you get a chance. All right, let's get moving. We got a lot to talk about. Even got an extra slide in there today. So let me introduce myself to you. My name is William Gilda. I am your moderator for the Market Opening Preview Series every single trading day before the London Open. Traders, I started trading in 2006 and 2008. I retired from a wonderful 27-year career as a firefighter paramedic out of the great state of Florida. Traders, 9 days later, I came to Thailand for 3 months for a holiday to celebrate my 27-year career. Well, it's 2015, and guess what? I'm still here. I haven't left, still here. Having a great time. Love living in Asia. It's just a great opportunity to see the other side of the world. And it's pretty funny. I live in a resort town. So over the last, I'm in my 8th year now in Thailand, and I've come to meet people from all over the world, and it's just really awesome. It's fantastic. Okay, I do trade Forex every single trading day. I'm always looking at technicals, fundamentals. I'm looking at charts. I'm looking for probabilities and opportunities to get into trades that will be successful on my side of the trade. Do I win every trade? Absolutely not. If somebody tells you that, please run the other way. They're lying to you. They want you to buy their 99.95 EA. That probably doesn't work. Okay. What trading Forex is all about, price action. We'll get into that when we get to the charts. That's just a little bit about myself. Let's get the legal stuff out of the way. This is our risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, most importantly, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. Traders, pick a style of trading that you like and just keep tweaking it so it works for you. Don't keep going from system to system to system, okay? It just doesn't work. Trust me. Been there, done that, got the t-shirt. All right, let's get over to news and commentary. Let me see where I think this will let me out of here. There we go. We're going to continue this. Hold on, I just got a freeze up here on my page here. Okay, let's take a look at the indices. The US 30 closed negative 0.73%. The S&P 500 closed negative 0.58%. The NASDAQ closed negative 0.96%. Small cap 2000 out of New York closed at negative 0.98%. All in the red in the US markets. Let's move on over to London. And that does not look much better, folks. The DAX closed negative 2.58%. The FTSE 100 closed negative 1.13%. And the CAC 40 closed negative 2.57%. The Eurostock 50 closed 2.41%. Not a good day. A lot of red. A lot of red going on out there. All right, let's come on over to Asia. Take a look at what's going on. Remember, these countries are currently trading as the Asian markets are open. And it looks like a bunch of red here, too. The Nikkei 225 is negative 1.17%. The S&P ASX 200 is negative 0.91%. The Shanghai is negative 2.14%. And the Hang Seng is negative 0.19%. With the Kospi out of Seoul, negative 0.94% currently trading. So that's what's going on with that. Let's take a look at our economic calendar. Very light day today for our economic calendar. 90 minutes after the London session opens, we have prelim GDP out of the Great British Pound. And then in New York, we have CB Consumer Confidence. And that is our only high-impact news data on a Tuesday. Very little bit of news coming out today. So it looks like it's going to be a technical trading day. Commentary, well, you know, we're saying, like, why is all this happening? Like, what's going on? Why all of a sudden is everything gone in the dumpster? Well, I'm going to tell you why, and it's one word, and it's called China. China's numbers, their exports came out yesterday, and it was horrible. I mean, their markets crashed the other day again. I mean, China is, you know, you got to remember, China is the second largest economic in the globe, right, in the world, next to America. So, you know, when you look at that, you know, and you wonder why, you know, the markets are doing what the market's doing, and it reflects on our charts, and I'm going to show you. These charts today are just like all over the place, and what happens is that because this is fluctuating so much, the dollar is, you know, ended yesterday in a 5-day slump. You know, the markets yesterday out of the U.S. closed in a 5-day slump. They've been in the red for 5 days. You know, this is not positive stuff. This isn't good stuff. So China is playing a really big role on what's going on globally, and it's affecting everybody. It's affecting us in Asia. It's affecting, you know, it's just affecting everybody, and the markets are showing you that. So what we're doing is we're trading what's in front of us, and you're going to notice that my trade plans today, even though they're pretty simple, they're not difficult trade plans. You know, they're not complex. Like, I usually have at least one or two that are pretty complex. But I will tell you, today, they're not complex. They're pretty simple. The problem is getting the entry. And the problem is, you know, well, that's the issue. You got to get the entry, you know, and that means you got to be in front of your charts, or you have to set target alarms and get a beep on your cell phone, you know to go to your charts, or however you do your trading, which makes it difficult for us, but pretty complex. Let me show you something here. I want to show you a news clip. Here's a news clip. This is U.S. market close summary. I just want to read the first line to you. You can read the rest. Just gives the numbers of what things have closed at. But U.S. indices moved lower for the 5th straight session, while money found its way to the relative safety of the U.S. Treasury market. The U.S. 10-year slipped back below 2.25%. The risk of sentiment was largely driven once again by aggressive selling in the Chinese stock market, along with the continued decline in key commodities. Chinese press reports indicated that officials remain active in stabilizing stock markets, and that they may even increase state buying through Chinese Finance Corp. WT crude and copper fell another 1%, despite some selling in the U.S. dollar. Gold prices bounced 1% back towards the $1,100 range. So, you know, what I said before, I probably just should have came to this and just read that to you, and it said the same thing. So now you have an idea why we're seeing such ugly charts and why they look the way they do. So let's move along. This is going to be a little bit longer than usual. And this is our 30-minute charts. Remember, each candlestick is 30 minutes in duration. All right, for those of you who might be new to watching, my charts are very simple. The green large line on the chart is a 200 exponential moving at EMA, exponential moving average. And the yellow line is support and resistance lines. That's an EA that's been put on the chart. And the red dotted line is just a mean line. That's all that is. Okay? So the charts are really easy, and I have pivots on my charts. Okay? So what we're looking for in the euro today is this just, you know, it's bullish. I mean, dollar's weak, it's bullish. Now, the issue with this is that this can change like at any time, at any day, at any moment. This can turn around and turn bearish on us, you know, if something happens in China and things turn around. And all that's going to take is a good day on their stock market, and we're going to go, we're back to dollar strength again. So, for today, we're looking for a pullback to this daily pivot point at 1.1063, and we'll take this to the upside. You really can't take it to the upside from here because you're already looking at like 17 pips to resistance. So, I wouldn't buy this here. If it goes up, it goes up. Away she goes. You'd have to find a different way to get into the trade. But I'm looking for the pullback to the daily pivot, its support, and we'll take it from there. And we're looking, to take profit at that yellow line, which is a resistance line, and that's at 1.1124. So, this is a nice trade. This is a nice 40-plus pip trade, if it works. But look at these candles. They don't look too, even New York candles, they don't look too big and like, wow, I'm glad to be trading. These candles look pretty sickening if you ask me. But let's hope we get some good price action there. But we got little data today. Remember, data and wobbleheads that get in front of microphones, good or bad, whatever they say, moves price. And we need data. We need people getting in front of a microphone. Okay? Let's take a look at the pound dollar. The pound dollar, this has been all over the place, the pound, in the last 2 weeks. And again, it all comes back to the same reason. However, we're at a very good area to take this long. We're at a great support area here. We're at the 618 fib. We have a 200 exponential moving average right there. And then right below that, we have a daily pivot point. And then we have a resistance line, which is now support. So, we got a lot of reasons to buy this. Okay? So, I'm looking for the bullish candlestick formation. If it doesn't pull back, if it gives us an entry now, I would take it. I would absolutely take it because my risk is going to be minimal. I'm going to put my risk, below that daily pivot point, and that's it. I'm going to risk 15 pips, 16 pips, and that's going to be it. That's all I'm going to risk. And this thing has a chance to go all the way back up to 5,600, which would be a nice, 45, 50 pip trade, depending on where you get out. And, this is a good trade, but we just need some price action. Okay? Let's take a look at the Aussie. The Aussie, it's pretty funny. I do for FXCL, I do a newsletter. If you go to their website, fxclearing.com, you can subscribe to my newsletter that gets emailed to you every day. And all they want is your name and an email address, and that's it. And they'll send it to you every day. And I talked about this in my newsletter today. And the situation here is that the Aussie dollar continues to move in a downward motion. It's still bearish, but it is moving so slowly. It's like watching water boil. It's horrible, price action-wise. So this is not like a fun, it's a good pattern trade because it keeps going lower and lower and lower, and that's what we want. But right now, we need this pullback, and we need a pretty stiff pullback. We need a pullback to this 50% fib at 0.7296, and then we can take it down to 0.7262. Again, here we're only looking at a 35 pip trade, folks. There's not a lot of pips here, and we need the pullback. But look at this big red candle we have, and we have no data in Asia today. So, this is what I'm talking about. This is going to be a London open trade or a London lunch trade before this pulls back. Because look at these candles; they're so small, they're so inconsistent. Besides the big red candle, if you look to the left of that, you got like 6 indecision candles right there. And that's my point. Let's head over to the Euro Aussie. This thing has been absolutely awesome. When this pair is in its trend, it just moves and it doesn't stop. And this has been in this uptrend and it has not stopped. If you've been trading the Euro Aussie since last Wednesday, you have made some great pips. And congratulations to you. This pair has just absolutely done exactly what we've asked it to do. Actually, this pair is making me look pretty good, to be honest with you. It's worked every day. Every trade plan on this pair has just worked every day. It's in it's in an uptrend. We'll just wait for the pullback, and we'll just take it up again, and we'll just keep on going. And what it's doing is it's exceeding what our take profit area is. I'm very conservative. Very, very conservative in my take profits. I don't even want my 20 pips or whatever. But this one I'm looking at, if this comes back to the daily pivot, we're looking at 56 pips of profit. Okay, so, this has a lot of opportunity here. And this is just, bullish, bullish, bullish. Well, it makes sense, doesn't it? The euro is strong. The Aussie is weak. What better pair to trade, right? You want to take strong against weak or weak against strong. One or the other. You don't want strong and weak and weak. what happens when you get that sideways price action. Okay. Alrighty, let's move on over to the euro yen. This is another pair all over the place. You know, 2 days it's bearish, 2 days it's bullish, then it's bearish. So today we're coming up to some support at the daily pivot point. And if you look left to the chart, price has reacted somewhat to that. Really, it's a little bit lower. But I'm looking for the bounce from the daily pivot point, and we'll take this up to 137.08. And we're at 136.46. So it's over a 50 pip trade if the trade works out the way we want it to. If it breaks that daily pivot to the downside and it gives you a retest, traders, sell it. Sell it. You know, do another trade analysis and a trade plan and sell it. And I would look to get out at that daily S1 at 135.87. You know, I mean, that's you have a wide open space. There's nothing in the way if this breaks to the downside short. So this is a good sell also. But the trade plan in front of us is this is bullish, and we expect a bounce here. So, you know, there's two trade plans here. Wow, I'm at 16 minutes already. All right, let's take a look at the New Zealand dollar. This is an ugly chart, folks. I even wrote that in my newsletter today. This is just an ugly, ugly chart. This is, you know, what are you going to do with this? Well, the New Zealand dollar is bearish, folks. Go and look at a daily chart. The problem is it's sitting at support, and it's just bobbling around at support. It's not making the move. It's not. You know, breaking it to the downside, and it's not breaking it to the upside. So it's bobbling 60 and 70 pips every day, and you know, up and down all around, and it's basically sideways. It's in a sideways price action, and as you can see on this chart, this is a nasty looking chart. So my trade plan is, okay, you know what? You need to come down to support, which is that 200 exponential moving average of the daily pivot point at 0.6604, and we'll take it up to 0.6638. Well, that only gives us a 34 pip trade. I understand that. We always want more than that. But there's nothing you can do. You have to look at the daily chart, and then you'll understand what I'm talking about. I can't give you a trade plan that's going to give you 70 pips because it's not going to happen unless something, you know, extraordinary comes out. The New Zealand, the Kiwi is not strong. Okay? The Kiwi is not strong. This pair is being moved by the dollar. The dollar is running this pair, not the New Zealand Kiwi. Okay, so the Kiwi is not strong. So just realize that. Okay, and then you have a good understanding. But really, take a look at the daily chart. Traders, sorry we went so long today, but I didn't have that extra slide in there. I thought it's very important that you see it. Traders, on behalf of myself, William Gilday, and our great friends at FXCL Excellence in Trading, have a great trading day. And traders, always remember to trade smart and not hard. Traders, till the next Asia session, have a good day, and we'll catch you next time. Take care now. Bye-bye.